Tires. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got 53 minutes left to go in trading in the day, and we got markets, man. Never said it before. 61.91. Yeah, we made it to 61.98, just shy of 6,200. S&Ps, record territory on the close. If we finish at these levels, you're trading up 0.7% or 44 points in the green at 61.91. NASDAQ 100, some of those tech companies, like I was talking about on that top of the hour update, how about it, man? Just mammoth numbers, and look at this acceleration, right? We're up over 1,000 points from where we were. I was going to say Monday morning, up over 1,000 points in the NASDAQ 100, man. You talk about it. Excuse me, Dow up by 383. You see the Dow just off the highs, but nonetheless up by 0.9%. And check out the Russell. Now, Russell way off the highs right now, but you got lower yield, which the small caps have greater exposure to that yield curve when you go forward, as in they have a lot of short-term debt. So when you get those types of ratchets up in yield, that's going to hurt them. On the flip side of that, as we're getting this morning, man, because, yeah, you are getting some higher price and lower yield. We got the 10-year at exactly at 112 right now, and we are at 4.26, 4.255 to be exact, but call it 4.25. I got to get that one off. Things are moving quickly. Look at the move in this thing, man. It is a one-way trip from yesterday's prices at 111.13. This morning, we were chopping around 111.23, and we're at 112 right now. So you have the 10-year at 4.25. And yeah, the dollar making a series of lower lows and lower highs, and it has not stopped, basically, from January 13th. You're talking about from 110, and we are now pushing a solid 97 on the dollar. You're at the lowest levels when you back this up on a 5-year weekly, 2022, and we're breaking those lows, and man, you are doing it with some large bars. Okay, there is momentum to the downside right now in this dollar. 97.217 in the dollar. Dollar looks like it's heading to 90, man. And yeah, you know, a great question from my man Frank in the Tigers Den this morning. I hadn't seen it when I was doing the show. And I talked about this. Frank says, you know, and I'll pull it up. It said, it's decoupling right now. And what happens maybe if you make that down to 90? Do they recouple, right? Maybe that's the next acceleration to gold. Let's just say dollar's coming down to 100, okay, which is what I think it's doing right now. And even with that happening, gold is not catching your next leg, right? But I think that is the setup, Frank, if you're listening out there, that the dollar's moving lower right now. That's already baked into gold. Okay, gold is not catching another leg higher. Yeah, and you have extreme weakness, and the dollar and gold cannot catch it. But what can happen is exactly that. Okay, that you get that consolidation, and gold just needs time, and it's great. We're going to talk to our man Tim Ward, you know, and he's had some great calls on gold coming up. But this run in gold, man, keep your spikes up, because with this type of dollar weakness, you can't get a bid. That means something, okay? And it's decoupled, and they'll get back together at some point. They will, okay? But it's not happening right now, man. S&P's up by 45. We jump over to the VIX. 1642. Volatility is gone from this market, man. And I think we might be sailing into July 4th. That's the impression I'm getting right now, man. We got, tomorrow's Friday. You come back, 3 solid days of trading. Thursday's a half day in the market. NYSE closing bell is July 3rd. Next Thursday at 1 p.m. Eastern Time, closed on the 4th. And yeah, what's to get in front of this market right now, man? And check out these tech stocks. Meta, within about $14 of all-time highs, from $485 to $726 in the period of just 2 months. What a couple 60 days that we've been in, folks. Talk about Fibonacci's, man. Look at that pullback right to the 382. Right there on the April pullback from 740 down. Check out some of the other high flyers. NVIDIA, the biggest in them all. NVIDIA does a full 618 of its acceleration from where they were in the beginning of 2024. Let's take a look at some of the volume. So this is on a weekly. We got tomorrow as well. That'd be some decent volume. We got the end of today plus tomorrow on NVIDIA. Pull it back to a daily. That was a nice sign of strength on NVIDIA yesterday. That's how you want to see it happen, man. Some of the equities, some of the you look at the S&P, so look at the volume on NVIDIA, right? This is strength, man. And this is what's carrying the market. So this is strong for the market. Right now, short term, there's nothing getting in the way in the front of this market right now. Today says it all. Strong numbers on NVIDIA on that volume yesterday, but look at the S&P. Different story, right? Look at this drop-off in volume. Now, today we probably get some volume. We're probably going to do more than 857. We're already at 720. We get the whole hour left. And the NASDAQ 100 not as pronounced because you did have some of that. But you look at those volume numbers and look at what NVIDIA is doing. Let's check out Amazon shares. Yeah, it hasn't really had the acceleration on volume. Today we're up by 2.5%. That's going to be a big volume number, though. Amazon already doing 35 million shares. This is how you like to see it, man. This market, it shook off everything. And I think this might be the next push for higher prices. I know I'm kind of changing my tune, but I think that's the deal here, man. We're over all this volatility. The uncertainty levels of 1644 in the VIX. Nobody's stepping in front, at least for the next couple of months, man. Weeks, excuse me. As we get through that July 4th, we'll come back. I don't expect the geopolitical deal is paused right now. And I'd be surprised if it flared back up. Weeks pass, things can change. But right now, we got a Fed meeting next month already in focus. All right. We're talking about that. President Trump might bring in a new Fed chair coming down the line, potentially September or October. Imagine what it's going to be like as instead of a transition period from next May where you're looking where you get a new Fed chair maybe in February, March, 3 to 4 months ahead of time, you're going to have somebody else and they're going to be talking. Okay, the person that Trump chooses, if he chooses them in October, they're going to be putting their views out. That's the reason why they're going to be in that position earlier. And I say that as in, I'm paying attention to this yield move, man. It is a move, we're a breakaway move, and I think this might be the beginning. And I say that as in the market pricing in cuts for September. But guess what, man? It's about to be July. And you know how the market gets ahead, and it already is ahead. Okay, we just traded this month alone from a 109 handle to a 112 handle in the 10-year. But we're still just at 4.25%. And you look at how many times the 10-year, whether it's in 2023 pushing 116, last year pushing almost 116. I think we got higher to go right now as yields pulling back. Stay tuned, folks. We're coming right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We jump around. You got Walmart shares on the negative today as we have tech flying higher. Walmart shares down by 1% or $1 to 96.23. We jump around to some other retailers. Target on the positive, up by 0.8%, up 80 pennies, 97.48 right now for Target shares. Keeping our eye on TJX. Oh, look at that. That'd be amazing if that was it. We've been talking about this channel line. Look at that. You open it, you spike the open, you get it back. All right, we're going to have some volume today. We'll see TJX touching the bottom of that channel line. If you've been watching the show, that is a well-defined channel line stretching back to 2022. Talk some other retailers. Kohl's on the flip side of that. Negative prices, but today catching a bid. Up by 2.5% right now. We put this back on a daily. Boy, that's a tough one from their earnings, May 29th, right? Can't get out of that. Listen, you trade to the top of that range, you give it all back, and just like that, we're back to $8. Imagine, you got all the way up to $10 and finish that day at 8. You get all the way back up to $9.65, and just like that, you're back at $8 beginning. Kohl's is struggling, man. No volume in this equity since these lows. Look at the drop off in volume on a weekly basis. This week we've only done 22 million, and we have tomorrow left. That's going to be light, just like last week. Nothing compared to the volume we were doing. Well, we'll see. If that's your pullback that's light on the pullback, let's see if we can find some strength there. All right, we jump around to what else we have going on. Yeah, in terms of economic data this morning, we talked about it, jobless claims on the 9 a.m. program. Okay, on a continuing basis, highest number since November of 2021, recurring. Okay, recurring's the most important one there. Initial jobless claims, not as important, but it's continuing claims, climbing to almost 2 million. 1.97 million is the number, ended June 14th. Let's see if they even update this from this morning, because I had it up here. Yeah, here we go. Look at the initial one. Let's blow it up. If you remember anything from this program today, folks, remember this. Remember the price and volume too, okay? But remember this. Look at that continuing claim spike. And I'm talking about just the spike from April. That's 200,000 extra people that are stuck on the rolls, not getting hired, as opposed to the initial, right? That is a number, man. And that's the biggest number we've seen since 2021. Yeah, in the consulting world, if you're doing government business, you better watch out. So McKinsey, BCG, they have to justify their consulting contracts. The GSA says it assumes most of their work is not core to the federal agency's mission. Watch out for that one, man. And in addition, the GSA on Thursday also sent letters to Ernst & Young, FTI Consulting, Alvarez and Marshall, EY. Look at this, yeah. That is quite a perfect reply. The opportunity to engage with GSA to demonstrate the value we provide for our federal clients and American taxpayers. They welcome it. All right, we talk a little bit of gold. Yeah, we talked about the PayPal scenario as well. We got GDP and trade deficit out this morning. Let's just jump around to some equities right now as we're rocking and rolling. And Amazon's on a run today, man. 2.5%. So you're going to look to take out these highs. The highs from a couple weeks ago on Amazon, 218.40. We're trading $1 from there right now. 217.35. And that's on a weekly basis I'm talking about. So you only got $1 higher. We still have tomorrow. I don't know what gets in front of this. Even on a daily basis, that's going to be a good number. You're not going to match the volume we did on the 20th, last Friday. But that's going to be a good number. We're going to do more volume since then. Man, Microsoft. I mean, maybe you're doing a one-to-one here in Microsoft. You're blowing past this B point, man. You're doing it with volume. Okay, the B point did not have a tremendous amount of volume in Microsoft. This is a weekly on Microsoft. And I'm going back to the run that began at the beginning of 2023. And you got ABCs all over these types of charts. But it's a one-way move. You pull back. And on the pullback here, okay, right to the 50%. Right there. Almost touched it. You're dealing with multiple, as I said, multiple. You back this up on a longer-term basis. You pull right back to the 50%. That's back to these highs. Also back to the highs of 2021, right? And boom, you take off to the upside. And a one-to-one in Microsoft puts you at $600, man. And you're at $500. So that'd be adding 20% value on an equity that's pushing $3.7 trillion. They'd have to add, what, $600 billion. But that's what it looks like right now. Now, on a monthly basis, the volume's not going to be there, though. Yeah, so look at that. On a monthly basis, right? You're not going to take this out with volume. Well, let's see. You kind of take it out here. Yeah, we take that out in May, actually, the body. You had a high of 468. We closed last month. The body, though, yeah, opens at 450. So we close above the body on higher volume. This is going to be an extension on lighter volume, though, on Microsoft. That's the only bear case I can see on a monthly basis. You're making this move. And after tomorrow, we got one trading day left, right? Yeah, after today, folks, on a monthly, there's only 2 trading days left. And on a monthly basis, Microsoft's only done 329 million shares, which is well below anything we've done going back on a monthly basis to what? I mean, look at this, though. It's been an exceptional period of time. Of course, when's the last time before the election? October, November, December, January, February, March, April, of course, May, and finally a little bit of lull in volume on that equity in particular. All right, we check back in on the metals. So gold is flat, 33.42. Silver today, positive. There you go. Silver looking stronger than gold right now. Silver up by 1%, 36.83 right now. We check in on copper. Ooh, all right. We talked about the short squeeze potentially on copper. All right. You coming back to test the highs that we have from 2024, just above where we are right now, and that spike high from March. Copper catching a bit. Let's see those copper stocks. Ooh, Ooh, there you go. Freeport McMoran up by 6.7%. Southern Copper. Okay. That's how you want to break out of a channel. Look at that. Now, ideally, you want to have a pullback on some lighter volume. All right? That's a nice price spread. On a volume basis, we're not going to match what we did last week. You had mammoth numbers going on June 20th on volume on this equity. Southern Copper did more than 6 million shares in an anomaly. Look at that breakaway, man. That's what you like to see. Copper stocks catching a bid. Southern Copper up by 7.3. Uranium stocks. This one, Cameco, man, up another 3.7%. $74. Let's see, Constellation up by 2.1%. All right, folks, stay tuned. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
welcome back, folks. We got the S&Ps looking for a record close right now. We're up by 45 points, or about 0.8%, trading at 6192. NASDAQ 100, record territory as well, up by 210 or 0.9%, 22,672. And right now, folks, we're going to jump over to our man Tim Ord, as we do every Tuesday and Thursday at the bottom of the hour. You can reach Tim every trading day at his website, ord-oracle.com. And don't forget, he's a couple of outstanding webinars under the services tab right at TFNN as well. Tim Ord, good afternoon.
Yeah, good afternoon. A lot going on. We actually got a decent bullish signal here. How long the rally's going to last? It could last for a while, but chart one is the just the daily SPY. We actually got a daily, a weekly, and a monthly. Kind of look at the short-term picture, intermediate-term picture, and longer-term picture. Perfect. But this signal kind of came out of pretty quick. It was kind of, anyhow, right in this area, I shaded in blue, and that's where the ticks, the trend got above 1.2, the ticks got below -200. This day we got 1.35 on the trend. This day we got a 2.1 or 1.24 on the trend. 219 down tick readings. We had 230 up tick readings there of 1.28. But anyhow, this area, which is basically 595 to 600, was showing panic. It kind of came out of nowhere. I kind of hesitated, but yesterday the trend closed at 1.38 or 1.35, and the down tick readings were 338. If you get a trend close 1.2 or higher and at least 200 down tick readings on the same day, that's usually a buy signal. And we kind of had it last week. I kind of hesitated, probably shouldn't have, but anyhow, we're long on yesterday's close, and we got enough panic to drive this market higher. And on a short-term confirmation, the bottom window here is the VIX. And the VIX kind of tells the confirmation, or gives confirmation for the S&Ps. If the S&Ps are going up and the VIX is going down, which is what's happening here, it's usually a good sign. That's even actually happening on a week. So even though we popped up today, if that VIX was up, that would have been a questionable sign. But it turns out the S&P's up today and the VIX is down. So the chances are this current rally is going to continue. And if you notice, we went sideways for about, I don't know, two and a half weeks here. So that's building quite a bit of cause for the rally to continue. So let's take a look at the next chart. This is the SPY weekly. And what I want to point out, you want to hit a previous high. This is basically the highest high of, looks like about November to February. The market went kind of sideways here, and the highest high came on, looks like about the first week in February. And we tested that high. We're currently testing that high right now on the weekly time frames. And that high, week high back in February was 170 million shares. Month is not over yet, or the week is not over yet. Tomorrow's still trading. We got 245 million shares. You want to hit the previous high at least on equal volume, preferably higher, to show a sign of strength through the high. If you're going up against that previous high, say like on 100 million shares, you don't have energy to push through that high. So we got 245, and we still got a day to go. So this is probably we're probably breaking out right now. This is against the previous high. We're showing a sign of strength. That's what Weiskopf called it. And so we're breaking out, and we're breaking out with volume compared to the previous highs. And so this rally is for real. And actually flip over to the monthlies real quick. Okay. So this looks at even the bigger picture. So this is not like we're going to rally for a week or two. We're going to rally probably for quite some time. Can we rally to a year end? We'll probably have some minor consolidations. July is usually not, or June and July, you get bounces. A lot of times you come back. What I think is going to happen here, well, the month is not over. Months is, we got what, until I guess next Monday's month end, so we're almost there. But if you notice on the monthly chart, when I drew this chart, we had 1.26 billion shares. The previous high of February had 8.73 billion shares. So on a monthly time frames, we're breaking above the previous highs and higher volume. So the 610 area is probably not going to be broke. We may test it, but it's probably not going to be broken because you're breaking a previous high and higher volume. You may go up, but you may come down to that area, but this area is going to be support. So in general, we shouldn't see below 610 for the rest of the year. But we may rally up, maybe come back here in September, I don't know, then rally up again and probably head up to that 640 area target. So the short-term time frame's bullish, the weeklies are bullish, and the monthlies are bullish. So this is a real breakout. And if you notice how there's really no fanfare right here, there's nobody really talking about anything, and that's really what you have. Is everybody recognizes a breakout, it wouldn't be a breakout.
Sure.
This is kind of a good. It kind of surprised me a little bit. I kind of hesitated on the buy signal, but this is a bigger buy signal. This is a buy signal probably as big as the April lows.
Doesn't get much bigger than that buy signal. And I love the take, Tim, and I agree with a lot of it, man. I'm watching the market today, yesterday especially, and what's fascinating, you're getting, some of the stocks that had been leading this market, they're almost leading it today too, whereas some of those tech stocks, man, you're up by 2.5%, 1%, 2%, some big moves in the market leaders, and maybe that's what the market needs to carry it higher, because those stocks that have driven it higher, they're driving it higher today as well. NASDAQ 100, but man, those leaders, NVIDIA up, it's just a remarkable rally. It is, for sure. All right, let's talk a little gold. I know gold is next. Go ahead. I'm sorry. Please go ahead. Were you going to add something?
Actually, I wanted to talk about this rare world thing we talked about last week. That was a confirmation, that you had the equal down candle compared to the equal up candle here, even though we had a day between. Both those volumes are about equal. They call them railroad tracks because that's what they look like, and that was kind of a confirmation. So you really had to be bullish from basically what's this May period. I thought we might consolidate, go sideways for a little bit longer. That turns out not to be the case. But in technical analysis, you got to be flexible. When the signals come in, you got to jump on the bandwagon. So I did, and so we're long.
Very true. All right, we're going to come back and we're going to talk some more gold, folks. Stay tuned. We're coming back with our man Tim Ward. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We're talking to our man Tim Ord. We got S&Ps near record territory, NASDAQ as well. You check in on the gold contract right now. Gold up $1 on the session, trading at $33.44. Remember, folks, you can reach Tim at his website, ord-oracle.com, and right under the services tab. On the front page of TFNN, you'll see 2 outstanding webinars, 6 secret ratios every trader should know, and the secret science of market tops. Those secret ratios, one of them is the SPY VIX, as we're talking about some of that, so check those out as well. All right, Tim, where are we going with gold? Let's talk some gold.
All right, here's the XAU, and this goes back to 1988, and I marked the times when the RSI was above 70. And that's where those red dotted lines across the chart. There were 7 of them. That's counting the current one. The last 6 marked intermediate term highs. So the chances of this current one marking an intermediate term high is 86%. So it's a high percentage, some sort of a high here. This, to me, it's just going to be a consolidation, probably something similar to like here or maybe here, but it's probably going to be a multi-week consolidation. Nothing real significant. But pull back to my opinion, there's quite a bit of support around the 175 on the XAU. That's probably where we're going to head back down to, which is basically about 15% lower. So in my opinion, you got an 86% chance you're going to pull back down to 175. So this is not like a major top of any consequence. This is just a consolidation to build more energy to go up. So it's probably, it's probably going to be pretty choppy. Don't know how it's going to look like when it's all said and done. But this is XAU going back to 1988. This is the GDX, also a monthly chart. It did hit a RSI above, we're currently at 73 on a monthly chart. It's probably a double top. I don't know if you can quite see that for your viewers right here, but it looks like a double top. The volume's going to be lighter on the second top. So it's got a support around 39. Previous highs when the RSI hit 70, all of them were actually double tops. So the chances are this is probably a double top. I did get out in April. Market went down a little bit, came right back up. I got up around 50 when I made this chart a couple hours ago. It was around 52. But this is going to be just a consolidation on the majors. The minors, I think, are going to do just fine because most of those are turning up on the monthly time frames. The Bollinger Bands are all turning up, and they're all turning up above the mid-Bollinger Band and higher volume. And actually, I'll show that next Tuesday. I'll show you why. I'll be looking out how to pick those out. I keep forgetting to do that, but a lot of these bigger ones have really big runs up so far, and they're due for consolidation. So the generals are going to consolidate, and the little ones are probably going to come to the forefront. This is a little shorter view. This is a GDX on a weekly time frame. We got out back in April, mid-April, so somewhere on this week here. That was 154 million shares. We tested a high on 142 million shares. That works out about 8% lighter volume, which is around 10%. But, a couple of weeks ago, this is second week of June. This is the first week of June. This is the second week right here. You tested that previous high the first week of June. It was 42 million shares. And if you notice, volume dropped, eyeballing it looks like about 30%.
Sure.
So it didn't really have energy to push through that high. So you can see what kind of happened here. So if you can't take out the previous high with volume, you'll take out the previous low. This previous low, the first one is 45. That'd be the May low. If we test that on higher volume, I don't know what the volume is. Looks like about 130 million shares, somewhere in there. If you test that on, say, 130 million or higher, chances are that low is not going to go hold. You're going to go down to the next lower low, and that comes in around 39. And I think that's where we're going to head. What time frame? I don't know. September, October, November. It's hard to say. A lot of times October is kind of a higher low for the gold stock, so we'll see how that works out. But nothing, this is a consolidation or an uptrend. It's nothing, in my opinion, to worry about for long term. I think in general this gold market is going to last for years.
Nice.
But short term, just be patient, I guess.
Patience.
So,
always key sometimes, I say, and sometimes that's the best advice at all. It's been a heck of a rally, man. I appreciate the takes. I agree with a lot of what you're putting out there. And, I was sending out charts to subscribers, Tim, of the Gold Report, just kind of reminding people of the cyclical nature sometimes of some of these equities. And, man, the run that we have had, and you think, folks, when you're in the middle of that, Tim, right, that, man, this is, would never go down far, and just the run has just been stratospheric. So it would make sense, man. You almost want it, right, in terms of for a healthy market, that there's got to be a breather at some point.
Yeah, you got to be a breather. I think this is similar to the 2000 bull market that basically lasts from 2000 to 2012. I got some charts that suggest that. We'll have to wait and see if that turns out to be the case or not. But this is not the major top of any consequence other than a consolidation back down to on the XAU 175, on the GDX 140. The next rally, there's going to be more participation on the next rally than the current rally we had so far. What I'm saying is things are actually going to get a lot better going forward. And I'm talking, maybe this year, it's going to be kind of, rest of this year might be kind of mushy because the consolidation could last until October. Sure. But from October, say that is a low of some consequence, we'll be able to pick that out through a lot of indicators I have. But that next rally, you got a lot of these minor, or these small ones just turning up on the monthly charts. They haven't really begun their run yet. They're $15, $20, dollar stocks. They're going to be probably $5, $10 stocks someday. And those are just starting to turn up. So I'm thinking next year is going to be a hell of a lot better, forgive my language, than this year. Then this year was a great year. It's going to get better. It's going to get, before this all said and done, it's going to be real frothy. But we're a long ways from that right now because people are still skeptical on the gold stocks. And that's good.
It is. So. And, it's crazy when you just look. I just said a monthly up going back, same thing to like 1990, and boy, the run it had, of course, the 2000s, man. But pretty wild that we were trading at $2,000 almost in 2011. And that's kind of where the run began from at like the beginning of last year. It was $2,000. So you're talking about 12 years, and we pulled back. But boy, when you look at it in that context, we were trading at $2,000 almost in 2011. So yeah, we're up by, the 3,300. But I agree, as in with, you look at it in that context, my goodness, it was a 10, 12 year consolidation to get through that 2,000 price point. Boy, and then you had the consolidation, of course, from 2020 all the way until 2023. So boy, it's just waiting to break above that level. And now here we are. Well, Tim, I appreciate it as always, man. Great information. So, we'll talk to you next Tuesday. You teased a couple things, so I'm sure we'll have the viewers coming back. And then we don't talk to you on Thursday because the market's actually closed half day on Thursday at 1 o'clock, Tim. So I look forward to the conversation on Tuesday as always, man. Have a great weekend. We'll talk to you then.
Thank you.
Thank you. All right, folks, S&Ps, we're pushing. We might get 6,200 in the futures. We're at 61.94, and you're looking at record prices across the board. NASDAQ 100 up by almost 1%, Dow up by almost 1%, Russell up by 1.5. Stay tuned, folks. We're coming back. One more segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we're making a run for it, baby. Look at this. The S&P is up by 50 points, 0.8% right now. NASDAQ 100 up by 222, 1% on the dot right now. Dow making a charge. And yeah, as Tim turned on the dime, I sent out market insights today, man, and I was saying I don't think anything gets in the way of this market right now, at least going through July 4th. What's going to get in the way? You know, very surprising to see if any geopolitical risks ratchet back up. If they do, watch out, but that's always ever present, okay? Crude, keep your eye on crude if you're worried about the Middle East at all. Crude's not worried about the Middle East right now. $65 right now. Crude, up barely. And then, probably the biggest story out there is yields. You're breaking, man. You're breaking a higher price. You're breaking lower yield. We're approaching 4.25%. 4.25% is what we're approaching on that 10-year. And you get dollar trading at 97.256 right now. And yeah, it's the usual culprits leading the way, man. Now, we had a little bit of a pullback in NVIDIA. Okay, you were all the way up to, 156. You're at 154 and change right now. Nonetheless, you're positive, but not with the market, but Amazon, right? Everything else. These stocks, Amazon up by 2.5% today. Google up by 1.75% today. I just chuckled. Mammoth numbers. Microsoft, record highs, pushing 498 right now for Microsoft shares. How about Meta? Up by 2.4%. Meta, you're 2% away from all-time highs for Meta as well, pushing 740 right now. You jump over to Oracle. Oracle up by 1.3%. AMD shares up by 0.3% right now. And yeah, you jump over to Nike. Nike has their earnings after the bell. Is that right? Yeah, I believe that is. Look at Nike trading up by 2.6% right now. Nike, been a little bit of a dog. Lower lows, lower highs, nonetheless. We'll wait there's numbers. S&Ps, we might get it. Might get it close. 6,200 on the S&Ps is what we're approaching. Record territory, not even territory. Record prices, S&P. Record prices, NASDAQ. Record prices, NVIDIA. Record prices, Microsoft. Not bad. Folks, thanks so much for wrapping up your trading day right here with me. We'll see you tomorrow morning at 9 o'clock. Have a great Thursday, everybody. We'll see you in the morning.